All right, folks, it's Johnny Seville with your executive summary for stock setups for Friday. Of course, the open range is tomorrow, so no big moves. We don't want to make any really big moves until open range has set and we have fixed a bias in one direction or the other. So we are still in a short-term holding pattern. S&P 500 did exactly as we expected it to and talked about in the last few summaries. We've gone up, we've respected the open range and closed right at the bottom of it. Of course, the lower end of open range being 2380 and we closed at 2381. So open range again, beautiful probability in calling the market direction. So in terms of looking at some my favorite watches at the moment that we discussed in Trading Room, let's do a quick review of what we've discussed tonight. Hertz does appear to be in a short-term breakout mode. I've been looking at this as a we looked at this in the class yesterday, and it does look like this is breaking out of the downtrend line. You can see it's just rallied outside of that on increasing volume from 1.73 to 2.12. So there's also some strong insider buying back in November. So obviously this stocks like this have been under pressure from Uber and all those other kind of easy car rental type companies, car2goes and so forth, has been crushed all the way down from 120 down to 20 bucks. But this could be a point of consolidation. We have Kyle Icahn buying, or the Icahn Enterprise Group buying a ton back in November, and seems to have started to consolidate around this price and maybe on the upswing. So on a possible long side, would be looking at this as again a possible upward swing from the current price. I'd be looking at a short-term target of 26, but possibly all the way up to this kind of this gap up around $28. So that would be one possible long I'd definitely take a look at. We've got TLYS on the short side. This is an apparel maker, I guess hat designer, I was informed. Never heard of them really before. But again, if this one breaks below the low of this candle, there's really nothing to catch it. All the moving averages seem to be on top, and it looks like it's just about to start breaking down. So if we break the low of this candle below, looking below, 876, so looking for a break below 860, let's have a look. What's the low over here? 874, so I'd look at 868. And a stop criteria at 963. That's above the high of this candle and above the 200-day moving average. This could be a pretty decent momentum freefall. You can certainly see where it's come from. Even just in 2016, we're looking at levels as low as down here at $6. So I'd be looking at this kind of this is as a short-term target. We may get some support here, but these are kind of going to be the areas to watch. So looking at 747 as the first target, or first area of support, but really what we're looking for is a breakdown to this lower level. That would really be the target I'd be looking for, is down here at 720. Or 723, just to go a little bit above that even number. Now that gives us a bit of an offside risk-reward ratio, but this is more just to give it room for the entry criteria, so it doesn't whipsaw out. I would be quickly sharpening that up and bringing it down just above that $9 area within a day or two, so that the risk-reward is sharpened up. But just to give it some wiggle room at the entry point, because you may find there's a bit of whipsawing if you get a bit of jiggle in the market. So there we go. Also, GPRE is on our watch list, the specialty chemicals company. A lot of insider selling here, and just waiting to see how this one forms up. Maybe another day or two away from an entry point. Aggressive traders may be looking at it now, but again, I'm keeping an eye on this. Got a nice downward neckline, possible double tap, head and shoulders. You can see tap tap on the left, tap tap on the right, two tops, and as you can see, I don't expect it to get much higher because we want to keep it symmetrical on the left and right. And as you can see, we didn't get three touches on the left, so we don't want to see three touches on the right. This is why we'd expect it to be topping out now or close to. Basically, we're looking for this to have a a possible short around this area, I'd be aggressive entry could be around here, but nothing wrong with another day or two. I would expect that if it were to break down from the current level, I'd be looking at a stop up around 24.50, or at least above this uptrend line, which is 24.50. So you'd be looking at about 24.73 as a stop criteria, and I'd be looking at a target of $14. So this could certainly be an interesting options play, looking at $25 June, July puts, that kind of thing. And that's kind of the areas I'd be looking at for targets and stop loss. It's just a matter of when the entry point, depending on how aggressively you want to go about it. HOLX is the last one. Interesting for a short-term possible trade here. You've got an inverted head and shoulders. You can see we flip it the upside down. Beautiful kind of head and shoulders pattern there. Flip it the other way up. This has some momentum characteristics to it. So I'd look at a possible half entry point where we're currently at, and but the confirmation is really going to come once we break $43. So $43 would be the confirmation entry. I'd be looking at the $43 June calls, and I'd be looking at a target of 45.93. And I'd be looking at a stop criteria of around 40. Let's have a look here. Looking about 41.53. So there you have it, a couple of very interesting watches. Again, I wouldn't be going too heavy into anything. These are plays that may be valid for tomorrow, but could certainly also be valid next week as well. Just wanted to give you a couple of ones to watch if you are looking for possible plays to start eyeing up. Again, once the open range gives us a break one way or the other, we're going to have the probability of the market direction back on our side probably early next week. Now, speaking of next week, it is, of course, time for the big one. Of course, this is one of our very specialty events that we only hold when certain market conditions arise. So it's not something we can usually plan more than a couple of days out. Now is the time. We have some very interesting cross-sections in the market, with high-yield bonds dropping while markets go up, stocks above their 50-day moving average plummeting while markets go up, a record amount, as far as I can see. The divergence of how many insiders are selling versus buying is huge, and we're just seeing all of these kinds of interesting marks all across the market, and that tells you something's cooking, and it's too late to react to it the day after it happens. You know, you've got to plan for these things, and we certainly are, and that's going to be what Monday is all about, the big one. We're going to be talking about open range. We're going to talk about what happens tomorrow and what that means for the market going forward over the next few weeks. We're going to be talking about how to play it, how to trade it. We're going to be going through all of the methodologies how we use to locate exactly where the smart money is going, and how much and how quickly, and how we use that to determine where the weakest stocks are in the weakest sectors, in the weakest industries, in the weakest markets. We'll also be using that same strategy to look for where the sweet spots of strength are, so we can find the most powerful longs to play while the market continues to edge upwards. But this is the way you got to do it, because there's not all of the markets going up. There's a lot of the market going down, and that's why it's so important now to focus on finding only the highest quality longs to seek for trading opportunities, while at the same time starting to find those juicy rotten apples ready to drop from the tree. And that's exactly what we're going to be doing on Monday night. We're going to be teaching you all about how to do it, how to find it, and then we're going to be going in and showing you the exact scans we use to find them. And that's what the second half of the workshop is going to be all about, is just biting into that juicy part of scanning. We're going to be going through the big one scan, teaching it to you, looking for stocks where there's a 20 to 50% decline potential in the patterns of the charts. Of course, when you're looking at options on those possible plays, we know what that means. There's huge potential if you can capture a 30-40% decline in a stock. You can look at lots of different options option plays that we'll be discussing on the evening. And again, this is the best of the best in terms of an incorporation of fundamentals, technicals, and putting it all together in powerful scans. So I hope you'll join us on Monday. We won't be doing it, it's not the kind of thing we do every week. It happens once or twice a year at best. And this Monday is the first one for this year. acornwealthcorp.com/big one. We'll see you there. Have a great night.